K Limited issued 6,000 debenture of 2 of 100 each at a discount of 5% payable. So 25 on application, 30 on allotment, 25 on first call and 15 on final call. So all debentures were fully subscribed and the amount were received except first call amount on 100 debenture and final call on 200 debenture. So we need to pass the journal entry and even we need to show the balance sheet. So let's get started with the answer. Hello friends, welcome back to my channel Quest for Knowledge. Now we are going to discuss the important 15 marks. Here the question is that K Limited has issued 6,000 debenture of 100 each and that too for the discount of 5%. So in that if we take 100 into 5%, then 5 is the discount rupees, which has to be, we need to deduct 5 rupee from here. Okay, so 25, 25, 50, 50, 30 and 15, 95. It means 5 rupee has already deducted now. Okay, so this is all the, now we need to pass the journal entries, we need to prepare the balance sheet. So let's get started. So students, how we written for the share capital, equity share, like that only we need to write for debenture also. So the question is 25 rupees on application. So you will receive the money first. So bank account data to debenture application account. So 6,000 into rupees 25 will get 1,50,000. Okay, after the application you need to call for allotment. Okay, you need to call for allotment. Whatever we got the debenture application, we need to transfer that amount to the debenture account. Okay, after that now we are inviting for the allotment. In every time allotment, in allotment entry itself we will entry the and we will make the entry of discount and will make the entry of securities premium. So we all know that securities we always need to credit it. Why? Because it is a profit to the company. Okay, it's like we are asking, instead of 10 rupee we are asking for 12 rupee. But discount, we are allowing the discount to the consumer, that is also to the debenture holder. So discount will always come on the debit side, security premium will come on the credit side. Now we have allowed discount of rupees 5. Okay, when you calculate all of this, we get only 95 rupee. It means 5 rupee is discount. So that come on here. Every time we need to make the entry on the allotment inviting time itself, that you need to get 2,10,000, but you are going to receive 1,80,000. Why? Because 30,000 you have given them discount. Now how much you will receive the money? You will receive the 1,80,000 itself. So bank account data to debenture allotment account. Now we need to invite for the call. Okay, come and pay the first call money, like that you are inviting. So that entry will be debenture first call account data to debenture account. For 6,000 shares you are going to pay the first call, which is of 25 rupees. By that 1,50,000 is to be your expected money should come. But 100 shareholder has not paid the money. So that you will receive that is 5,900 share into 25, you will get 1,47,500. 100 is the defaulters, they have not paid, so that will come in the calls in arrear. If they have paid in call in advance, that will come in the credit side. Okay, but they have defaulted, so it will come in the debit side to the debenture first call account, which was I was about to receive 1,50,000. Instead of that I am receiving only 1,47,500, and 2,500 come under the category of calls in arrear. Now debenture, now we are inviting them to come and pay for the final call, which is 6,000 into 15 rupees, 19,000 rupees respectively. After inviting in this, 200 people have failed to pay the shares, to which how much money you are going to receive is that 5,800 shares of 15 rupees, 87,000 you are going to pay. 200 into 15, they are the defaulters, they have not paid. So by this we need to give the entry. So our journal entry is done. So now we need to make the entry. So now we need to prepare the balance sheet. So how you will be preparing the balance sheet? First you need to, what is main important entries, that is bank and the debenture account. These all are the main important entry, will make the ledger account. First if we take the bank account, we will take share application, allotment, first call, final call, all the money. When we tally it, we get the total of 5,64,500. and in debenture also, when we take the overall debenture is 6 lakh, but in that if we remove calls in arrear, we take 5,64,500. by that we need to make the balance sheet. So debenture is the liability, it will come under the debenture side, and our overall debenture which we asked for 6,000 shares into 100, okay, debenture, sorry, 6,000 into 100 debentures we asked, but in that is completely 6 lakh rupees. In that we need to remove calls in arrear which we have not paid. By that we have got the answer, which is 5,94,500. Here 5,64,500 is our total, 5,64,500 is our total bank account. In that the discount which we allowed, that come under this, okay, that is 30,000 will come under the asset side. By that our balance sheet gets tally with 5,94,500. By this you are going to get 15 marks for this question. I hope you are clear. Second chapter is let's move on to the second sum, which is Nishal Limited issued 2,50,000 share of 10 each, which was underwritten as follows: to Mr. A 75,000 shares, firm underwriting 8,000 shares; Mr. B 62,500 shares, firm underwriting 12,000 shares; Mr. C 62,500 shares, firm underwriting nil, which is nothing; Mr. D 50,000 share, firm underwriting 30,000 share. So the total application excluding firm underwriting but including market applications were for 1,80,000 shares. The market applications were as under: Mr. A 40,000 shares, Mr. B 36,000 shares, Mr. C 24,000 shares, and Mr. D 48,000 shares. Calculate the net liability of each underwriter treating. We need to treat firm underwriting as marked application and firm underwriting as unmarked application. Okay, now let's move on with this. As per the question, first of all we need to make certain working note. Like first, the how much of share is issued? It is 2,50,000 share issued for 10 rupees. It means 25 lakh. Okay, now how much of total application we have received? We have applied, actually we have issued 2,50,000 of shares, but we have received only 1,80,000 of shares. Okay, in this now it has given A how much of shares, B, C, D. When we take this all, this is 1,48,000, which is marked application, and when we minus 1,80,000 minus marked application, we get this unmarked application, which is 32,000. I hope you are clear. The share issued is 2,50,000. Okay, the share received is 1,80,000. and we have got some of the underwriters A, B, C, D, which is 1,48,000. Okay, in that if we take out, this is marked application, but whatever is left, it is unmarked application. Okay. Now we need to calculate underwriting with marked application and with unmarked application. When we take all the underwriting, we get 50,000 as our underwriting. Okay. Now we to add it up with the marked application. So A, B, C, D. So when we add them, we are getting the applications, which is, this is the marked application with underwriting. Total we are getting the 1,98,000. Similarly, we need to calculate firm underwriting plus unmarked application. We know what is the unmarked application, which is 32,000. Firm underwriting is 50,000. That also we need to add, which is unmarked application plus underwriting, which is 32,000 plus 50,000, that is 82,000. See, these are some of the working. Now we'll move on to the calculation of underwriting. As first we will go through with the marked application, and afterwards we will go for the unmarked one. So first, what are the gross liability? It is already written in the question, which is 75,000. Okay. So this is the real question. Okay, they thought that 2,50,000 they can distribute it to A, B, C, D. By that they can get 2,50,000. Okay, which is 75,000 A, 62,500 B, 2,500 for C and D 50,000. The total is 2,50,000. But we have got the marked application plus underwriting, which is 1,80,000. But sorry, 1,48,000 is our marked application. We have 32,000 which is unmarked application. Now this 32,000 unmarked application, we are going to give them in the we are going to distribute them according to this ratio. Okay, so what we are going to do, we are going to minus unmarked application under the ratio of 750 is to 625 is to 625 is to 500. Okay, like 32,000, example, 750 divided by 2,500. Okay, like this the shares will be distributed to them. Okay, like calculating this, we get this answers. Okay, now we need to deduct this 75,000 minus 9,600. What will be the? So now we have deducted the unmarked application under this ratio. Okay, this ratio, their unki capital, we have taken it from their capital, 750, 625, 625, 500, 250. Overall 2,000, that is overall 2,500. So these, according as per their ratio, we have distributed the unmarked application and we have deducted it from their liability. Now we are going to deduct the marked application, which is already we have calculated here, which is the marked application plus underwriter, that we are going to deduct it here. The marked application, we need to take this values, okay, which we have added with the underwriting. Okay, marked application plus underwriting, this value we need to take it here from the gross liability. After deducting unmarked application, we need to deduct the marked application. When we deduct this marked application, we get this balance. This is also positive balance, this is also positive balance, this is also positive balance, but here we have this negative balance. So this should be compensated. So what we are going to do, everyone are going to transfer their surplus to this person. Why? Because he is in loss now. Okay, like that you may take it, understand it. Okay, now the surplus has to be transferred. What value? That is 34,400 should has to be divided by them as per their, which is 750 by 2,500 and like 625 by 2,500, 675 by 2,500. By that we get the value. Now when we distribute the surplus to them and then when we deduct their surplus which is being distributed, okay, so 17,400 minus 12,000, we are getting the 4,500. Here you can see the value is 6,000 and what we have taken is 10,000. It means it has come in loss, negative. 30,500 minus 10,000, 750, the rest is 19,750. Okay, so okay, so that is it. Here we have compensated and the balance is 0. Okay, now this fellow is now in loss. Now again we are going to do, this is surplus D. Now here we are going to deduct the surplus and we are going to give it to B. And what ratio we will give? 750 is to 625 is yeah, he has no value, only this two fellow is going to give their surplus to them. So what value? 4250 into this person's value will take, which is 750 divided by 2,500 and 4250 into 625 divided by 2500. By that what value we get? Let's go through and check. Now when we distribute the surplus to them and then when we deduct their surplus which is being distributed, okay, so 17,400 minus 12,000, we are getting the 4,500. Here you can see the value is 6,000 and what we have taken is 10,000. It means it has come in loss, negative. 30,500 minus 10,000, 750, the rest is 19,750. Okay, so Okay, so that is it. Here we have compensated and the balance is 0. Okay, now this fellow is now in loss. Now again we are going to do, this is surplus D. Now here we are going to deduct the surplus and we are going to give it to B. And what ratio we will give? 750 is to 625 is yeah, he is not, he has no value, only this two fellow is going to give their surplus to them. So what value? 4250 into this person's value will take, which is 750 divided by 2500 and 4250 into 625 divided by 2500. By that what value we get? Let's go through and check. When we deduct these values, why? Because he got the surplus. Okay, so that is why no balance here. And when we deduct 4500 minus 2318, we get this value, and this is compensated. And from 19715 we remove 1932, this value, which is 17818. Okay, now what we are going to do is, keeping this value, now we are going to add this with the underwriting value. Okay, the underwriting value is already here, we have done in the working sector, which is 8000, 12000, nil plus 30,000. This value we are going to add with the final value of this. Okay, by this is the value. Okay, the last value. In this value we are going to write, or we are going to take all the underwriting, only underwriting we need to add. Okay, when we add the underwriting value, what do we get? The final value is 10,182. This is the underwriting value, which is 12,000, as it is 17,818, 13,000, 30,000, and the underwriting, overall underwriting is 50,000 plus the value which this remaining value, overall 70,000. So this is the underwriting we have done with the marked application. Now we are going to do the underwriting with the unmarked application. So how we are going to do it? Let's go through. So first of all, we will take the gross liability as per given in the question: 75,000, 62,500, 62,500 and 50,000, 2,50,000 respectively we have written. Now in this we need to minus unmarked application, which is included with the underwriters. Why? Because in our first sum also, what we took, the working, initial working what we took was this, no? Initial working what we took was this for the marked application. Similarly, for the unmarked application also, we need to take up unmarked application plus underwriting, which is 82,000. Okay, so this 82,000 we are going to take and we are going to distribute it to them as per this ratio: 750 is to 625 is to 625 is to 500 ratio. Okay, 82,000 into 750 divided by 2,500, 82,000 into 625 divided by 2,500, by that we get this value. Okay, we have distributed this 80,000 as per this ratio. Now when we deduct this, we get this value. Okay, this is the balance. From after marked, unmarked application, now we need to mark marked application. Here we should not take anything, we need to take purely marked application. Okay, we should not take the underwriting added one, we should take only the marked application. So when we remove the marked application, we get this value. When we get this value, now this is minus, he is in loss, we need to compensate him. So how you will compensate this? This value has to be distributed. In this surplus we need to take from them from their ratio, and then we need to give this to him. So how we are going to do? We are going to take that 14,400 into 725 divided by 2,500. He is going to give 5,400 to this fellow, and 14,400 into 625 divided by 2,500. He is going to give this amount to this fellow. Similarly, this amount to this fellow. By that this loss is being compensated. Okay. Likewise, you just for your understanding thing I am telling. Okay. Now when we deduct their minus,
okay, whereas the surplus which is given to the D partner, when we remove that, this is their final value. So nobody is in negative now. When this is the final balance, to this final balance we need to add underwriting, the underwriting balance, and then this will be our final value for the unmarked application. Okay, I hope you are clear. Let's discuss the one more time the marked application, which is all the liabilities to be written, and then unmarked value, which is plus with the underwriting. Okay, sorry, here we have taken only the unmarked value, only the unmarked value 32,000 purely, that we are going to deduct it. After that we are going to deduct the marked value which is with the underwriters. Okay, to whom with marked application means this is added with the underwriters, unmarked application means will be added with the underwriters. Now here we are doing the marked application. So unmarked we have to take it as it is, and marked we are going to take it with plus underwriting. So that value we are going to write, and then we need to check the surplus. He is in loss, we need to give him the money, and then this person is in loss, we need to give him the money, and when there is no negativity, then we are going to add it with the underwriting value. Here also this is the, we are going to do the unmarked one, no. So unmarked one we are going to minus it with the underwriting value. Marked application we are going to take purely marked application without any underwriting value. This thing you need to keep in mind before making the entries. Though it is very easy, I hope you will be able to do it, just practice. So the question here is that dividend of 5 the following details are obtained from RK Limited. 2000 equity shares of 10 each fully paid up, which is 2 lakh, equity share of 10 which is 750 paid up, which is 1,50,000, and 20 equity shares of 10 each which 5 paid up, which is 1 lakh. Now general reserve is 1 lakh, liability is given, current and fixed asset is also given. So the normal average profit after tax of the company is estimated as 60,000 rupees, and the capitalization is 10%. We need to transfer of general reserve is 20%. Now we need to calculate the value of each type of share by two methods. One is the asset backing method and the yield method. Now let's go through with the problem. So students, this is the market value of asset. Fixed asset is also given in the question, which is 3,60,000. Current asset which is 4,40,000. Total asset is 8 lakh, and liability is net asset liabilities is 2,50,000. In that net asset available for equity shareholder, now we need to calculate by removing the asset with the minus liability. We get the net asset which is available for the shareholder, which is 5,50,000. Now in this we need to calculate intrinsic value. The formula is net asset available to equity shareholder divided by total equity share. So 5,50,000 divided by 4,50,000, by that we get rupees 1.22, which is the intrinsic value. Now 20,000 equity is of 10 rupees, so 10 into 1.22, 750 into 1.22, and 5 into 1.22, by that we get the value of 12.2 and 9.115 and 6.1 respectively. So this is the calculation of asset backing method. So nothing, you need to understand that asset should be minus with the liabilities. By that, whatever the balance is, that is the net asset available to the equity shareholder. After that, we need to calculate the intrinsic value. So the formula is net asset available to the equity shareholder divided by total equity shares. By that we get the intrinsic value. Whatever the intrinsic value we are getting, that we need to multiply it with the equity shares. That is it. By that we have got the answer. So this is the calculation of yield method. In this, first of all, we need to calculate the average profit. So profit is already given, which is 60,000, and reserve, which is 20%. So 60,000 into 20%, if we take 12,000, we need to remove that. By that, for average profit is 48,000. Step 2 is to calculate the capital profit. So how to calculate the capital profit is that average profit into 100. So 48,000 into 100, we get 4,80,000. Step 3 is to calculate the MV, which is, that is the capital, okay, capital profit divided by total equity share. 4,80,000 divided by 4,50,000, we get the 1 rupee as the value. Sorry, the intrinsic value we have calculated, so the value is 1.066. So that is it. We'll move on to the next. Students, model paper 2 and its answer I have attached here. Go through with it, work out, okay, and if you are not able to find the answer or get the proper answer, if you have felt any doubt, the answer is there in the last. So that is it from my side. I hope the video is helpful to you, and I have not done the 8th sum, okay, from the model paper 1 and model paper 2. The three method, okay, underwriting one problem, the debenture one problem, and the another finding the values, intrinsic and the net asset value, yield method value. So that itself, if you prepare well, that is much sufficient for you to get good marks. And the paper 2 I have not done, I have not explained. So I want you to prepare it, I want you to practice it. If you want answers, the answers is there in the last of this video. You may check out that after practicing it to know whether you have done correct or what. But the what kind of a concept you need to follow, the same thing you need to follow, and you need to do the answers. The concept is going to remain same itself. So that is it. I hope the video is helpful to you. Do like, share and subscribe, and do share it with your friends. Thank you so much for watching.